Good morning. Thank you for joining today's daily webinar. Please like this video as it helps us to get the word out of this important information to other solopreneurs like you. For educational purposes, we're not going to be providing any financial advice on today's daily webinar. So today, we're going to go ahead and answer your questions, and we're going to talk about how we're going to answer the question, can an S corporation have a solo 401k plan, also known as an individual 401k plan? Let me go ahead and share my screen here. And let's see, it looks like we have a few questions here. So let's take a look at some of those. So here's a question here. Being self-employed, I was mistakenly thinking solo 401k could reduce self-employment tax. I can only reduce federal tax. I am in a 22% tax bracket, but 10 by 960. Why 9.6%? Well, so is your business tax as a sole proprietorship or as an S corporation? If it's taxed as, then the contributions will be based on your net self-employment income after you subtract 1/2 of self-employment income tax from line 31 of your Schedule C. If it's an S corporation, then the contributions are going to be based on your gross wages. So box 1 of your W-2. Now, it's important to understand that contributions to a retirement plan, whether it's a traditional 401k, also known as a full-time employer 401k, or an owner-only plan, such as a solo 401k plan, reduces your taxable income, your federal taxable income for the year. So using my example of if your business is taxed as an S corporation, where the contributions to the plan are based on your W-2 wages. Let's say you have 100,000 or you report 100,000 of box 1 W-2 wages. Let's further assume that you make an employer pre-tax profit sharing contribution of 25% of 100,000. So that would be $25,000. That's going to reduce your corporation, your S corporation's taxable wages by 25,000. So you're going to report that 25,000 pre-tax contribution on your Form 1120S. Let me pull up a page on our website that talks about the where you deduct that. Let me make the screen a little bigger here. So if you make a pre-tax employer contribution and your business is taxed as an S corporation, then you're going to file Form 1120S, and then you're going to report that contribution on that Form 1120S. Let me pull up the right page here. Give me a moment here. Here we go, reporting contributions. Here's a great page from our website. It's got a nice contributions. So again, if we're talking about an S corporation, and if we're talking about an employer contribution, that gets claimed on that Form 1120S, line 17. Now, if you make an employee contribution, let's say you're making a contribution for tax year 2024, and you make an employee contribution of, let's say, $23,000, which is the maximum annual employee contribution for tax year 2024, then let's see here. Where's our information here? Employee pre-tax. Okay, so the pre-tax contribution will get reported on your Schedule 1, line 16, and that's part of your personal tax return, Form 1040. That Schedule 1 is an attachment to Form 1040. So again, making contributions to a solo 401k plan reduces your taxable income, not your self-employment payroll tax or FICA, for instance. Now, in the case of a corporation, let's take a look at our cheat sheet for corporation. In the case of a corporation, an S corporation, for example, back to the employer contribution piece, there's another great page from our website that talks about contributions for an S corporation. So again, it's going to be based on your W-2 wages, box 1. That's for both employee and employer contributions. I want to touch on how employer contributions, how that impacts the payroll tax. A moment here. Let's see here. Go down to that example here. It's a great page. We have a lot of good FAQs on this page here. Here we go. Are employer contributions subject to FICA or Medicare tax? So in terms of tax benefits, profit sharing plan contributions are exempt from FICA tax because the corporation, not you, makes contributions on your behalf. Again, that's that 25% employer contribution that we discussed, where you deduct that on your 1120S, which is the tax return for an S corporation. There's a good page from the IRS website where they have an FAQ as well that reads retirement plans FAQs regarding contributions. Are retirement plans contributions subject to withholding for FICA, Medicare, or federal income tax? And they've got a good chart there, and it says no. Let me share this page with you here. But again, when you contribute to a retirement plan, such as a solo 401k plan, the government or Congress allows for these plans so that you can save for retirement, number one, and second, so that you can reduce your taxable earned income for the year by making contributions to the plan. Okay, maybe we have some more questions here, and then we'll go ahead and continue on today's topic, which is, can an S corporation have a solo 401k plan, aka an individual 401k? There's a question here. How can a spouse avoid husband's daytime 403b contribution limits? Well, keep in mind that when you open a solo 401k plan, it is sponsored by your self-employed business. So if you're the only employee in that business, That means you don't employ any non-owner W-2 employees that work 1,000 hours or more. Then the plan is sponsored by the business and you can contribute to the solo 401k plan. Even if you're, another example, let's say you both spouses work in the same self-employed business. Well, that's not going to impact one spouse's solo 401k contributions. And of course, that business cannot employ any other W-2 employees who are non-owners. With the solo 401k plan, the rules allow both spouses to participate in the same plan if they are both working in the same self-employed business and that business does not employ any non-owner full-time common law W-2 employees who work 1,000 hours or more. So back to your question here. Let's say that you both are working in the same business. Let's just assume that it's an LLC. We both work under the same LLC. That means that the LLC would sponsor the solo 401k plan. Let's further assume that, so the first spouse's name is Sam, second spouse's name is Jane. Let's say that Jane is the one that also participates in a 403b at her daytime employer, while Sam does not participate in any plan at all. Therefore, Sam can contribute to the solo 401k plan up to the overall limit, which, for example, for tax year 2025 is $70,000. Now, Jane, if she already maxes out her contributions to her 403b, let's say up to $70,000, then she will not be able to contribute to the solo 401k plan, but that's not going to impact Sam's ability to contribute to the solo 401k plan if he does not make any contributions to a 403b plan. So again, it's driven by which spouse is participating in that daytime employer 403b plan. Okay, I want to share a line here that talks about the separate holding accounts for each spouse. Again, using the example of an LLC where both spouses work for the same business. In this case here, the LLC would sponsor the solo 401k plan. There are two participants. We got Sam and Jane. So each would have separate holding accounts under the plan. So one plan has separate holding accounts, aka bank accounts or brokerage accounts for each spouse. In this case, it would be a pre-tax bucket, a Roth bucket, and a voluntary after-tax bucket for a total of 6 buckets, 3 for Sam, 3 for Jane. Now again, if Jane already maxes out her 403b contributions up to the overall limit of $70,000, then she won't be able to contribute this year, but maybe next year she will if she has W-2 wages or earned income from that LLC. And then she can contribute if she doesn't max out her 403b contributions. Now, if Jane is participating in a 401k or day job instead of a 403b, then the rules are different. Even if she maxes out her contributions to that 401k at her daytime employer, she can still contribute to the solo 401k plan. It just depends on what contribution types. So let's say she does max out her daytime job 401k contributions. Well, she still will be able to make voluntary after-tax contributions up to the overall limit of $70,000 if she has enough earned income reported from that self-employed business LLC. That's because voluntary after-tax contributions are not impacted by your daytime job 401k contributions. What is more, she can still make employer profit-sharing pre-tax contributions as well if she wanted to, because employer profit sharing contributions are not impacted by your employer or employee contributions that you make to your daytime job 401k. Now, her employee pre-tax or employee Roth contributions would be impacted by her daytime job 401k employee contributions. That's that 23,500 limit for tax year 2024, 2025, I should say. Okay, that's a lot of information there. Let me take a look at some more questions here, and then again, we're going to get started on today's topic here. Let's see here. We've got a question here from another question here. I need to know the math. Well, we already went over that. Okay, as far as the math, you're going to want to talk to your CPA on your math calculation there. However, if we're talking about tax year 2024 contributions, let me give you a good resource on our website where you can determine how much self-employment income you need to maximize your contributions to the solo 401k plan. And if your business is a sole proprietorship, if I can find that here, give me a moment. A good guide. Where is that at? Another search here. I think you mentioned your business is taxed as a sole proprietorship. So here we go. If you're trying to make contributions for tax year 2024, here's a great guide we put together. It talks about how much income you're going to need to maximize your contributions to a sole proprietorship for tax year 2024. We got all kinds of examples here. Let me share that with you. Just share that with you. Take a look at that. There it is. Again, it's titled, How much income do I need to max solo 401k contributions for sole proprietorship? And that's for tax year 2024. We've got another follow-up question here. If I contribute 10,000, but I am taxed on it because I clearly only getting 9% off, and the 10,000 goes into a pre-tax account plan, I'll get taxed on it again in retirement. So contributions to a solo 401k, when you make them on a pre-tax basis, those are deductible. If we're talking about a sole proprietorship, we're going to be deductible on your personal tax return. So that'll reduce your taxable income for the year. So if you're making a tax year 2024 contribution in your business tax as a sole proprietorship, let me share this page here with you. And you make it as a pre-tax contribution, and that's going to reduce your taxable income for the year. So it's going to be based on line 31 of your Schedule C. That's going to be the starting figure for the calculation. You plug that into our calculator, it'll provide you the amount that you can contribute. And then you're going to go ahead and report that on your Form 1040. Here's a great cheat sheet here that talks about how to report contributions. So employee and employer pre-tax contributions are going to be reported on line 16 of your Schedule 1, which is an attachment to Form 1040. Whatever amount you contribute that you report on that Schedule 1, that's going to reduce your taxable earned income for the year. You'll get a deduction. But yes, when it goes into the solo 401k, it goes in as a pre-tax basis. It'll grow tax deferred. So it'll maintain its tax deferred status in that plan until you begin distributions, generally a retirement, And depending on what the tax law is at that time and the tax rates, then you're going to pay taxes on distributions at the time that you start making distributions, generally a retirement. All right, let's see here. Give me a moment here. We're going to go ahead and get started. We'll come back and take a look at some more questions here. Again, 401k plan, aka also known as an individual 401k. Well, the answer is yes. An S corporation can sponsor a solo 401k plan. Give me one moment here. Okay, here, now you can see the screen. So just like a sole proprietorship or a partnership can sponsor a solo 401k plan, the same is true for an S corporation. Remember, solo 401k plans were enacted by the government so that the self-employed, specifically owner-only businesses, those solopreneurs, so that they can also save for retirement by opening a solo 401k plan. So it doesn't matter on the self-employed entity type, as I touched on earlier. In other words, whether it's a sole proprietorship, an S corporation, C corporation, partnership, and LLC tax as an S corp, LLC tax as a partnership, LLC tax as a sole proprietorship, or even a farm where you file a Schedule F, that business can sponsor a solo 401k plan, provided that the business does not employ any non-owner full-time W-2 employees, that is, anyone who works 1,000 hours or more who is not an owner in the business. Also, if we're, since we're talking about an S corporation specifically, let's say that S corporation has multiple owners, and the other owner is not a spouse, because again, the solo 401k allows for both spouses to participate in the same plan, and both spouses don't have to own the business. So one spouse may own the business, but the other one simply works for that S corporation. They can still participate in the plan. But if we're talking about a S corporation with two owners who are not spouses, then each owner is going to have to own greater than 2% of that S corporation in order to qualify for that solo 401k plan. So if you have one owner who is 3% or more owner, for instance, so greater than 2%, but the other owner owns less than that greater than 2% amount, let's say 1%, then he or she is not going to be able to participate in the plan because he or she has to own greater than 2% in that S corporation and also have W-2 wages to contribute. So again, that same rule doesn't apply to spouses, but it does apply to non-spouses who are self-employed in an S corporation. You have to be an owner, a greater than 2% owner, as well as working for the business, so receiving a W-2 in order to participate in the plan. Let me share this page here with you, which is a good resource as well. Okay, so since we're still on the S corporation topic here, let's go over a few items related to S corporations as they relate to the solo 401k plan. Give me a moment here. So keep in mind that from a solo 401k perspective, you still have time to open a solo 401k plan for tax year 2024. corporations right now, so let's stay on that topic. So you still have time to contribute to a solo 401k that's sponsored by an S corporation, and you can contribute for tax year 2024 if you already have a solo 401k plan. But if you still have not opened a solo 401k plan and you still want to make contributions for tax year 2024, and your business is taxed as an S corporation, then you can open a solo 401k plan now, and you're going to be able to make two contribution types for 2024 for that solo 401k plan. You're going to be able to make both employer contributions to that plan, as well as voluntary after-tax contributions to the plan. Let me share screen on that. So you're not going to be able to make employee contributions for 2024 if you don't have a plan up and ready here in 2025, but you are going to be able to make both employer profit sharing contributions and voluntary after-tax contributions for tax year 2024 here in 2025. And you're going to have until September 15 of 2025 to make those 2024 employer contributions. So here's a great chart from our website. So what I'm talking about here is the setup deadline for an S corporation for tax year 2025, for 2024. If you want to be able to make contributions for 2024, then as long as you set up that plan by September 15 of 2025, so this year, you're going to be able to make employer contributions to that solo 401k for tax year 2024. That's pre-tax employer contributions or Roth employer contributions. And you can make voluntary after-tax solo 401k contributions for 2024 as part of the mega backdoor. You're going to have until September 15 of this year to both open that solo 401k plan so that you can make contributions for 2024, both employer and voluntary after-tax contributions. You're going to see that it's too late to make employee contributions, unfortunately, because the plan had to have been established by December 31st of 2024 to make 2024 employee contributions. But the employer contribution and the voluntary after-tax contributions are not impacted by that December 31st deadline. Instead, your deadline is going to be September 15. Let me share this page with you here. Got some great information on this topic. Okay, let's go back and look at some more live questions here. Again, thank you for joining today's daily webinar. Please like this video as it helps us to get the word out on this important information to other solopreneurs, self-employed persons like you. Let's see. Got a question here. Oh, let me go back here. I think someone else had a question first. Give me a moment here. There's a question here. If your wages for an S corporation is 23,000 or less, are you required to have a W-2? Yes, you are. If you're looking to make contributions to a solo 401k plan and your S corporation is your self-employed business, then your contributions to that solo 401k plan will be based on your W-2 from that S corporation. I know that some CPAs will have you issue a 1099 NEC through that S corporation instead. If that's the case, then the contributions would be based on a Schedule C, line 31 would be the starting figure for that contribution. But most S corporations report earned income on a W-2 because you would pay yourself from that S corporation, and that's how a W-2 is issued. It's to report gross wages that are paid to you from the S corporation. So if you want to contribute $23,000 to a solo 401k plan for tax year 2024, and you want to make it as an employee contribution, you're going to have to report a minimum 23,000 of W-2 wages on that 2024. And I shared earlier a guide on maybe I did that for sole proprietorship. Let me share a guide that talks about maximizing contributions for tax year 2024 for an S corporation with respect to how much income you need. Here's that page here. Let me share this with you, the guide. Yeah, great information here. It has examples of how much W-2 wages you need to max out contributions. I just went ahead and share that link with you here. There it is. Well, bottom line is, in order to contribute to a solo 401k plan, you're going to have taxable earned income. It cannot be based on investment income. It's got to be based on earned income, which is income generated from doing work in the business, specifically material services. Okay, one moment here. Let's look for some more questions here. All right, there's another question here. I have a solo 401k. I want to make Roth solo 401k contributions for 2024 or maybe 1 years and still have full-time W-2 job. Is my contribution subject to adjusted gross income? I believe that it will be over 236,000. Do I need to go through an IRA or can I contribute directly to that solo 401k to isolate the Roth funds? So with the solo 401k, you can make various contribution types, including Roth solo 401k contributions. Through the Roth solo 401k bucket, the brokerage account or bank account under the solo 401k plan. So if you make contributions to that to your solo 401k based on your W-2 wages from your S corporation, and if you're looking to make contributions for tax year 2024, then the maximum Roth solo 401k contribution for tax year 2024 is $23,500 if you make it as an employee contribution. Excuse me, for 2024 is $23,000. For 2025 is $23,500. But you're asking specifically for 2024, so you can make a $23,000 Roth solo 401k employee contribution for tax year 2024. You can also make an employer Roth solo 401k contribution for 2024. That's going to be based on a percentage. That's going to be 25% of your W-2 wages. You can make that employer Roth solo 401k contribution, and then you would get a deduction on your Form 1120S for that employer Roth solo 401k contribution, but then it would be considered a taxable in-plan conversion, so it would be taxable on your Form 1040 personal tax return. And if you're making it this year for tax year 2024, it'll count as a contribution for 2024, but it'll be considered a taxable in-plan conversion for 2025. So it's kind of a quirky situation when you make employer Roth solo 401k contributions versus employee Roth solo 401k contributions. And those contributions, whether employee or employer, are going to be based on your W-2 wages. And they're not going to be tax deductible if you make them as an employee pre-tax contributions, because Roth solo 401k employee contributions are never deductible, but instead they're going to grow tax-free. That's the trade-off. But if you make it an employer of solo 401k contribution, then that's going to be tax deductible on the S corporation 1120 S tax return side, not on the personal tax return side. But then again, it's going to be taxable on the personal tax return side. So again, we're talking about employer Roth voluntary after-tax contributions. Let's see if I can pull up a good link from our website that can give you some good information on that. Yeah, with the passage of Secure Act 2.0, it really muddied up the waters regarding the various contribution types and the various rules that apply. Here's a good page here about employer 401k contributions. Just share that link with you there. Okay. If we have any more questions there. As far as your question, when a W-2 must be issued, it generally needs to be issued in January. So, get one issued if you did issue one, or if you did issue one, you may need to go back and amend that W-2. Okay, one moment here. Let's see if we have any other questions. All right, I think we've come to the end of our questions today. Again, thank you for joining today's live webinar. Please like this video as it helps to get out the word to other solopreneurs like yourself. And we'll be back again, and have a good rest of the day.